Everyone. I'm still trying to get back on a regular recording schedule, but let's go ahead and do some technical analysis. Definitely like and subscribe if you got the content, and make sure you share it with others because it really helps out the channel. Let's get right into it. So we're starting with SPY here on the 4-hour chart. You can see we're still downtrending below the 144 EMA here on the 4-hour. And of course, it's still a downtrend on the daily chart. But I will say we're a little bit extended here, so somewhere around 5 to 6% below that 144 EMA. And the last time we were this extended, you can see this was about 7%, and now we're down around 5 to 6%. And it's not a terrible strategy to think we might get another move up to retest that 144 EMA, or at least a little bit of a relief rally, maybe into the $350 to $400 price range for SPY. Moving over to the 1 hour briefly, you can see we already did get that cross on the lower portion of the MACD, indicating a potential reversal. And you can see right in that 350 price range would be the 144 here on the 1 hour chart. So that would be my price target if this reversal continues to fruition. Moving over here to the NASDAQ, you can see very similar story, big move down, potential support here at 285. Looks like a slight bounce, and we'll see if this comes to fruition closer to that $300 level, which would be about 3 or 4% higher than we are right now. Moving over here to the IWM or the Russell 2000, you can see this is a much more bullish structure. We've maintained this level of support here, and we're still sliding upwards slightly, and we're not nearly as extended as we were on the other charts. You can see we're only about 5% from that 144 EMA, which is a little bit less than we were extended to the upside, almost 9% there extension. And now it seems like we've gotten a little bit of a bounce, and this support level is giving us a price target of close to 189, maybe 190, again giving us some more upside. Moving over to XOP and oil, you can see this is still very bullish here in terms of structure. The structure leading up to here was also very bullish. We did have that massive rundown. You could see we were very overextended at 170 or 171 before touching that 110, 111 area. And now again, recently we've moved down back into this 135 to 37 price range, right at the 144 EMA. Classic setup. If this holds, there's a lot of upside potential, hopefully back towards that previous high of 152. Which would give us around $13 or $14 of upside over the next couple weeks, which would be a great trade if you can capture all of it. Moving over the stocks that I like quite a bit right now, Lululemon, here to start. Not a great trade opportunity, but it is down slightly from resistance around that 160, around that 355 to 360 price range. Still pretty high in terms of price, but it is sitting on this previous high for support. Keep an eye on this for a potential move back up to that 360 level. But definitely not as good of a buying opportunity as we had here at the beginning of September on this clear level of support, slightly below the 144, but definitely right at support. You can see the support held, and then we made a huge move higher from about 126 all the way up to about 355. So big move there. Very strong momentum here on Lululemon. And watch for a pretty good setup, or maybe that's for maybe a little bit deeper pullback for a setup, or if we get a little bit of a smaller move back up to that 360 level. Moving over to StarBucks, still very bullish here, you can see in the short term. On the 4-hour chart, we had big bottoms here in June with everything else. The retrace wasn't nearly as dramatic as everybody else, going from 189 down to 182. Pretty small move down, and then we had this pretty decent rally back up to 193, making new highs with a little bit of a pullback. If we come back down and retest the 55 EMA closer to $87 per share, that would be a pretty good entry in my opinion. But this structure is still very bullish, and it seems like we're going to go higher here with StarBucks. Moving over to some of the markers that I watch, this is the NASDAQ divided by the S&P 500. You can see right now we are testing support. We made some lows here in May and June for this ratio. Came down and tested here at the end of September. Got a pretty decent rejection looking candle. See a little bit closer here. Touched into this 303, back up to 306 here at the close. And you can see these moving averages are getting pretty close together, indicating that there is potential for a reversal. We might see growth in tech start to outperform once again. If we can break back above this 144 and we get the cross here on the EMA, that would be a pretty good indicator to me that growth and the NASDAQ are going to outperform going into the end of the year. Of course, we have to watch the dollar right now. So this is DXY on the weekly chart. You can see it is very overextended. Currently sitting about 12.5% from that 144 EMA on the weekly chart. which in the past has been very overextended. So we have a couple of points in here where we were 8% or so. Right here in the highs of April of 2015, you can see we're about 16%. Then we went sideways for quite a while, allowing that EMA to catch up before we had a little bit more of a push up, only 10% higher than the EMA, before we had that sell off and a little bit of a retrace. So currently sitting at that 12.5% is very extended in my opinion. Seems like we could get a little bit of a retracement or at least some sideways price action, which could give stocks a little bit of a breather or time to go sideways, which should prevent further selling. Last on my list of stocks to watch, we have TLT. This has been murdered over the past couple of weeks. Going back to December of 21, it's gone basically straight down, about 30%, maybe a little more, 31% or so from the highs from December all the way to September of 22. And at this point, these prices are the same prices that we saw all the way back in 2014, October of 2010, or even April of 2009. So it certainly seems that bonds are pretty cheap right now. Of course, the concern is that the yields from bonds are not keeping up with inflation, but even with that, this seems very cheap for corporate bonds. To wrap up here, let's look at my TastyWorks account. You can see we're down quite a bit year to date. A lot of this was a few $1,000s down from the recent sell-off. You can see I'm long oil going into this next week, pretty long on the NASDAQ as well, but almost neutral. And then IWM, I do have a small position there as well, with a pretty small beta-weighted delta of only 9 here. So slightly long, not very long going into the Monday, as I do expect to have a day or two of upward movement. Definitely like and subscribe if you got any value out of this video, and comment down below what you think of my predictions or any predictions that you might have, or any stocks that I should cover in the future. Of course, hit the bell so you don't miss out on any future content. And none of this is financial advice, this is all for entertainment purposes. Good luck in your trading and have a great day.